News Radio 700 WLW.
Steve Cotton, we love talking to this fellow right now, president of Cotton Wealth Management Associates. So, Steve, there's a lot going on. We have the shutdown going on. We have the tariffs going on. All the ins and outs that none of us understand are going on. How are we looking?
Good afternoon, Eddie. How are all my friends in Cincinnati doing?
We're doing great. You tell us, are we doing okay or not?
Yes, we're going to be fine. I think the shutdown, potentially affects about 750,000 government employees. And I'm more concerned in the short run about the impact on their families and their, those employees that are day-to-day, paycheck-to-paycheck workers. They're good people, and they're being jacked around in this political process in Washington. And it's unfair and it's counterproductive. It doesn't help anybody. And I hope that that the Senate Republicans and Democrats can come to an agreement. But right now, this is driven more by politics than anything else. Now, the good news is I do think this will be a short-lived shutdown. We're in day 9. They're playing chicken. Chuck Schumer is very nervous about his New York primary and a potential challenge from his left flank. So that's why this is happening. But I think in the short run, we're not going to have a major economic problem from it. But if it goes on another 2 weeks, I think there will be negative complications.
Right. Well, Steve, mentioning that, you 750,000 government workers, this affects. Beyond that, though, how does that then impact if this does go on and becomes a negative that goes beyond just those employees? That affects everyday people, right?
You're exactly right. Let me give you an example. The Small Business Administration processes small business loan requests all the time, every day. And right now, that process, we could see a $2 billion a month negative impact of small business loans that are not being processed and approved. We can see an impact.
Just alone on that, yeah.
Air traffic controllers are already, calling in sick. Now they're an essential service, and they have to work even if they don't get paid. Everybody that's not being paid right now will eventually get their paychecks made whole. But it's disruptive at the very least, and it does have a ripple effect. People delay their Christmas planning. Companies reduce the amount of inventory they're planning. Manufacturing orders starts to slow. There's all kinds of implications of this because you're disrupting people's and companies' ability to plan, and that is usually has a negative impact.
We're talking to Steve Cotton, our financial expert. And Steve, what about everybody? One of the things that in the financials that everybody's always talking about is the Fed and rate cuts and all that stuff. How do you see this kind of playing out here? Is it going to put more pressure on them? Is it going to cause them to just kind of kick back and go, okay, we've got to wait and see what happens? What's going on there?
Well, one of the things that impacts the Fed immediately is that the statistical reporting that the Fed relies on to help make these decisions is not going to be there. And now I think the Fed has plenty of evidence. Last month we had a 32,000 reduction in payroll when they were hoping for a 45% plus up. We're seeing some slowing in different industries. We've known the economy is slowing a little bit for some time. That's not going to be new information to the Fed, and I think they still can make decisions. And I am still expecting a 25 basis point cut. That's like 25, not quite 1%, but 0.25% cut downward in the federal funds rate at their next meeting. They can do it without a large amount of new data, and I hope they will, because interest rates have been way too high for way too long. It's not justified by where the economy is. Inflation is way down, and I hope that they will do that to the benefit of everybody, including service on the federal debt.
Well, Steve, you alluded to it there, right? We typically get a jobs report, the first Friday of the month, And we haven't gotten that jobs report yet, right? So we are,
that's right.
kind of in the dark
That's
on what the impact on the economy right now.
Well, I don't think it's wise to make, major interest rate decisions on the basis of a 30-day set of statistics. And there's always some question about the reporting of the statistics. Some of the reports are more reliable than others, and that needs to be looked at. But I think everybody knows that the economy is fundamentally still sound, still working well. There are soft spots here and there. The housing industry has not fully recovered from COVID yet. There are a lot of people out there, prospective buyers, that are waiting for long-term interest rates to come down some more. And the Fed doesn't control that, but it does impact it. And so there's a lot of companies and a lot of buyers and prospective homeowners that are kind of sitting on the sidelines now waiting to see what happens. First thing that needs to happen is the Senate needs to resolve this and get the government working again, because the public does not want this shutdown.
Yeah, we're talking to Steve Cotton, our financial guy. And Steve, another thing I wanted to ask you about, one last question here, is, I got 401k and all that stuff, and obviously it's invested in the stock market and all that stuff. But what about the price of gold? I mean, precious metals, gold and silver, are through the roof. Did I miss a boat on that? What's going on there?
Well, typically you'll see spikes in the price of gold in times of international stress, military action, things like that. High inflation. Gold is a good hedge for inflation. Right now, the gold is over $3,500 an ounce, and I think can still climb some more. If you don't have gold in your portfolio, you may have, an ETF gold, or there are you can own gold mining company stocks, things like that. But gold it should be a part of people's portfolio, but only in a relatively small proportion, because typically people want to buy gold when it's high and they buy it, and then the price falls because things get back to normal and they lose money. Gold has actually appreciated well over the last decade. I think there still is some upside, but if you have a well-diversified portfolio, as you should have, you're going to be fine regardless of this. The market's down significantly today, but today what's going on, I think, largely is profit-taking. The markets have been up. People are taking their profits. They're selling. They're harvesting those gains, banking those gains. But the smart money is going to stay in this market, because I think there's a lot more upside yet than downside.
So, in other words, what I was going to do is all this gold I harvested for my grandparents and my parents, their teeth, their necklaces and whatnot, I should sell now.
No, I think I'd hold on to it a while longer.
All right, cool. Well, I'm just trying to make an honest living here, Steve.
Come on. But you need to invest in good company stocks and bonds and be very diversified in both of those areas, and you'll do just fine. A lot of the economic initiatives that President Trump has put in place, the mega trade deals, the thinning of the government, the reauthorization of the 2017 Trump tax cuts, all of that is absolutely huge, including an unprecedentedly high defense budget. All of those things are going to send positive ripples throughout the economy, and I think we're setting the stage for another long, protracted growth period in the U.S. economy, and I think we're going to be the envy of the world in another 12 months.
All right. Well, Steve Cotton, I certainly hope so. Thanks so much. People want to find out more about you. Where can they go?
Well, I have a website, Cotton, COTTON, WMA, stands for Wealth Management Associates, cottonwma.com. We have clients all over the country. I even have clients in Egypt and Italy. So we just love helping people. We're good family stewards, and we take a financial planning approach to everything. And we partner with anybody that needs help.
All right, buddy. Thanks so much.
Thanks for having me.